Good day, everyone. This is your European Open briefing for Thursday, May 4th. My name is Michael Florentiades. I'm the chief economist here at exxon.com. And these are the key points you should know about today for this foreign exchange market. The Fed statement last night was on the hawkish side. This is supportive of the dollar, but it was not a big surprise and no huge moves. And the risk appetite remained positive, so stocks were not hit by the hawkish Fed, which is important. Now, Macron did relatively well versus Le Pen in the TV debate last night ahead of Sunday's election, but the euro was unmoved. In fact, not a lot of reaction there. And the Australian dollar was hit hard as industrial metal prices dropped, especially iron ore. For the remainder of the day, we have UK services PMI, Eurozone retail sales, US jobless claims, and factory orders a little later, and the ECB's Mario Draghi and the Bank of Canada's Paulos are scheduled to speak later on. Now, about the Fed chose to look past the weakness of the first quarter GDP numbers, which came in at 0.7% annualized, very low rate, as well as some other data that were pointing to some economic softness. It chose to concentrate on the strength of the labor market, and I think the fact that the unemployment rate is at a 10-year low justifies this optimism. Now, of course, the non-farm payrolls are also to be watched. They are out tomorrow. The yields were slightly higher. You can see here the 2-year yield, which is a good indicator of what the market thinks the Fed is going to do over the next 2 years on average. Very slight rise of around 1 basis point. But I think the conclusion to take from this Fed meeting is that a June rate hike is looking quite probable right now as things stand. Now, the euro, I think it's possible that the slightly hawkish Fed pushed the euro lower. I don't think there was such bad news on the euro, especially since Emmanuel Macron seems to have done better than his opponent Marine Le Pen. So this is good news. We had the French presidential candidates debate last night. But at the same time, it seems that the market has discounted a Macron victory, and it might not, quote, buy the fact. We often joke, as well-known saying is saying, buy the rumor, sell the fact. Well, when Macron is announced the winner on Sunday, most probably a lot of people are expecting a positive move by the euro, but it seems that the market has been discounting this, so it will be interesting to see what happens. Now, there have been major losses for the Australian dollar. As you can see here, it's below 74 cents, and it had a huge drop yesterday. That's a very big move for a major currency. Why is this happening? Commodity prices are slipping, particularly industrial metals that Australia specializes in exporting. And just as an indication, iron ore front-month futures were down 8% today in the Dalian exchange in China. Copper is also under pressure today. So, all taken together, this shows that without any real negative economic news out of Australia, we have the Aussie at a near 5-month low. We did get, of course, Australian trade balance, which was a little worse than expected for March, but okay, I mean the prior month was revised a little higher. Anyway, I think it was commodities more that did damage to the Aussie. Today we also have UK services PMI, the huge services sector of the UK economy, the most important sector. We are going to have Eurozone retail sales for March, but they are a little late. I remind everyone that we are in May, so March retail sales may not be so exciting for the market. It's not a number that the market tends to move on. We also have jobless claims. Those are interesting because they are at very low levels, so we'll see whether they come back a little from previous week's 257,000 number. Labor cost and productivity for the first quarter, and of course factory orders later on. We will get a speech by Mario Draghi later in the day, as well as from the Bank of Canada's follows. That's all for today. Thank you very much for watching and have a great day.